Rick Wedell here, Chief Investment Officer at RFG Advisor in Birmingham. Thought, given the events of last night, we would come to you with just a brief update today, tell you a little bit what's going on. For those of you who've not seen the news, the Ukraine was invaded by Russia overnight, shooting war, actually starting, which wasn't, I would say, unexpected, but unanticipated and obviously unfortunate. Once again, we're going to focus on the market's reaction to what is happening, but no one obviously ever wants to see a war. So, a little bit of a somber day, regardless. The S&P 500 is currently at 4160. We are in correction territory. It's down about 1.5% as I'm talking. It's about down about 12.5% for the year. Not as bad as I think most people would expect. Nasdaq's a little worse. Dow's a little bit better. Um, you know, I would say that investors, I think, were harboring hope that all of this was a ploy around negotiations, that maybe it actually wouldn't get to shooting, that we could be able to walk to the brink and negotiate a solution. It's obviously not going to be the case. That all that said, European and in particular Russian markets are bearing the brunt of the fallout for this. So if you just look at international markets as a whole, they are down about 4% on the day. This is a much bigger problem for Europe than it is for the United States because Russia's primary trading partner is Europe for gas and grains and a bunch of other stuff that we're going to get to in a little bit. I would also note that, as expected, the traditional safe haven assets like gold, U.S. treasuries are responding well. They are up in price. And maybe notably, I would just comment that Bitcoin and other digital currencies are not. They are behaving more like tech stocks than they are like digital gold or a safe haven asset. So we'll have more on that in a future update. But in any event, you're seeing the sort of classic response we would expect to see when there's fear in the marketplace. Um, so what does all this mean? Well, the chances of any major power jumping into the fray with troops to actually fight Russia appear to be very, very, very low. No one is talking about that. Everyone is talking about sanctions as a way to punish Russia. That doesn't mean that we won't be supplying the Ukrainian resistance with arms and support and anything else that we can do indirectly. But the chances of direct hostilities breaking out between Russian forces and basically any other country appear quite low. No one wants to escalate that war. So it looks like the response is going to be one of economic sanctions. Economic sanctions are what was used against Iran. They've been used in a number of these types of situations previously. They were what was used when the Russians annexed Crimea back in 2014. It doesn't appear to have worked in that case. However, those sanctions were somewhat limited, and these sanctions have been described as rather sensationally as the mother of all sanctions packages. For sanctions to work, they have to be somewhat painful to both sides. And if you look at what Russia exports, you can start to get a laundry list of the goods that are about to become either more expensive or unavailable as Western European nations, as well as the United States, start to shun those exports. And those would be oil and gas and corn and wheat. And you can see those in the futures markets today. Oil is up above $100 a barrel. Wheat and corn have sort of spiked to their daily limits of how high they can go, or at least daily change limits. Um, this will create some inflation issues, which we're going to talk about in a little bit. But more importantly, it creates supply chain disruption. The Chinese, which we're also going to mention in a few minutes, have stayed on sort of a razor's edge here. They do not want to, they have their own territories out there, including Taiwan and the South China Seas, that they have sort of disputed claims to. And they want to stay away from condemning someone from using military action to seize control of disputed territory. So they have just been preaching diplomacy. And overnight, they actually agreed to import Russian wheat in sort of a sign of solidarity, a softening of sanctions. And what this basically means is that the Europe, which is heavily reliant on exports of Russian and Ukrainian gas and oil, is going to have to find new sources for that. And Russian supply chains are going to have to relink themselves to export that oil and natural gas to countries where there is an export market, where primarily China, where they will be able to satisfy demand. That disrupts supply chains, and it's going to raise prices, and particularly in those commodity style markets, you're seeing those supply chains get roiled. It's not necessarily a bad thing if you're a U.S. farmer or if you're a U.S. oil producer. You're seeing prices increase, which isn't bad for you, but it is bad for the rest of us that consume those things. The direct impact on U.S. stocks is probably pretty low, if we're honest. We don't export a ton to Russia. And honestly, the impact is more one of knock on and side effects of what does this do to our European trading partners, and what are the potential further effects, plus just one of general fear. When fear enters the market and seizes control, investors get less greedy, and that means people are more likely, when they're uncertain, to sell out of the market, hold cash, try and time things. In terms of the longer term effects, I was having a conversation with one of our advisors this morning about, okay, well, how does this get bad? What's the next wild card? And I think that there are really two out there to sort of be concerned about longer term. The first is inflation. So we're seeing spikes in energy prices and certain food commodities. There's a question out there right now about, okay, well, how does the Fed respond to that? Typically, the Fed would look at core inflation, which is inflation that excludes food and oil, when they start to think about their interest rate decisions. We are still seeing, pretty significant demand and pretty significant core inflation. And so it's quite possible that the Fed decides to stay the course, or at least stay the course that they've communicated earlier with interest rate hikes. If they feel like the supply shock that is coming to the marketplace may actually do a little bit of their work for them in terms of slowing down the economy through supply shocks to food and energy, then they may actually be a little bit less aggressive with interest rate hikes. So that's actually somewhat of a positive for the economy in an odd way. But long story short, I think the view on inflation is that the Fed will either maintain their pace or maybe actually slow down a little bit their expectation of rate hikes as they see the supply shock sort of move through the economy. Um, the second longer term thing that I think you have to be concerned about is China. If China learns from this entire experiment that no one is willing to go to bat militarily for these various, disputed territories, if you will. Do they get emboldened to say, hey, if the only punishment that the world is going to shower upon us is, economic, then maybe we should take back Taiwan, or maybe we should take over the South China Seas, or the islands in the South China Seas. That's a much bigger problem. It's a longer term problem. They certainly haven't indicated that one way or another. They're playing their cards very close to the vest. But the Chinese economy is significantly larger than Russia's. They are a much more valuable trading partner to the Western world. And so, in a weird way, sanctions are almost harder to levy upon the Chinese. They would be more painful than they would be to levy against Russia, which is actually a relatively minor player in the overall global economy. So those are two longer term concerns, nothing that we're worried about right now. I think you see a little bit of fear continue into the marketplace, a little bit of volatility continue into the marketplace for a couple of weeks as things settle down. But as we've talked about before with some of these things, sometimes the fear of what's happening is actually worse than the certainty of what happens once it starts. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. Once again, obviously a somber day, but wanted to give you an update on what it kind of all means from an economic standpoint. Thanks so much. Look forward to talking to you again soon.
Thank you for tuning in. And if you're enjoying this content, please subscribe to our YouTube channel and click the bell to be notified when we post more.